Hi friends, welcome to Yadnya Investment Academy. As we all know, today was a day of red. Both Nifty and Sensex fell by more than 8%, the biggest ever loss in terms of absolute figures if we look at. So in today's video, let's see what is the reason for that fall, what is its impact, and as a retail investor, what should be our approach. So friends, let's just see what is the reason of this big fall. First of all, as per Union Health Ministry, the confirmed number of coronavirus cases in India is 73 now, which means it has now officially arrived in India. So we were hoping it to be contained like Ebola and SARS, but seems like it has now reached India. And looking at the figures that are coming up for Italy, UK, US and other European countries, it seems like there is a high probability that it's going to go increase now. So we'll say it's sort of a knee-jerk and a sudden reaction given that the increase in number of cases for coronavirus in India. There's that impending feeling that it's going to increase and then it is going to impact our economic activities, it's going to impact trades, it's going to impact our economy. Just like the global economy is getting impacted currently, right? What is the another factor that added on to it? Dow Jones also fell by more than 5% yesterday. So there is that global feeling that there is a recession that's going to come, there is an economic recession that's going to take place. So that added on to that coronavirus panic vector. So it's not just India, it's becoming a global feeling that there's going to be a global economic recession. So both the factors combined together, that's where we see this is how the market reacted to both the news, and that's why this big fall that we saw today across all stocks. So in terms of the impact, we now know that all the companies are going to get impacted. If the lesser number of people who are going to come to work, there'll be loss of productivity, there'll be less production that is going to take place, the trade will be restricted, mobility will be restricted, it's going to impact the supply chain. So it's going to impact all the companies. There'll be a certain impact across the economy, there is no doubt on that, but the extent to which this impact is going to take place may differ based on the sectors and may also differ based on the company. So of course there'll be sectors like airline, sectors like hospitality, sectors like entertainment that are going to be immediately affected because of this coronavirus scare. However, there'll be few sectors which may not get impacted as much, and there may be some benefit that they may derive out of the situation, like healthcare and pharmaceutical. But because of the impact on individuals and on the workforce, definitely all the companies are going to get impacted. So of course, there's going to be an impact on your portfolios. You'll be seeing them bleeding red. But what we would urge is not to enter that panic state. Even though it's easier said than done, but don't get influenced from a lot of negative news that's going to come at this point in time and take immediate actions on it. The impact on the portfolio certainly is negative, but what we see and what we feel, keep an eye on good companies, keep an eye on which are the companies that are getting impacted less as compared to companies that are getting impacted more in this scenario. Stay invested in the companies that have a good business model in place, that have strong management in place. So it's the right time to figure out which are the actual quality stocks versus the stocks that are not good in long run. Look for stocks that have very low leverage in place, that have very less debt in their balance sheet. Companies that have very good working capital management, such that they can sustain a scenario wherein there is a cash crunch situation is in place, like we see currently. So it's very important to stay invested in these companies that have very good business model in place. How to figure that out is as I said, you can see which are the companies which are getting impacted less. Of course, there's going to be an impact, but you need to understand and figure out which are the companies on which there's a lesser impact versus the companies that have a bigger impact because of the current crisis that we are seeing. Looking at the current fear factor that's going in the markets, and looking at the price fall that has taken place in Sensex and in Nifty and other stocks as well, there'll be these good quality companies that will be available at a very attractive price. So keep your eyes open to understand which are the companies that have good business model and that are available at a very good price currently. And friends, let's see, as a retail investor, what should be my approach towards investments in this current panicky situation? So as Mr. Warren Buffett says, that stock market is basically a tool for transferring money from impatient to patient. It's so well said. So the current time that you see, it's a very good example to see that shift and understand whether you're an impatient investor or a patient investor. It's the true time when you can figure out what is actually your risk appetite. It's very easy to get driven by the panic state and very easy to get driven by the fear factor that's currently prevalent in the market. But what's important is to take a step back, have a rational thinking, have a logical approach in place, and then react rather than getting driven by the I'll say the herd mentality and then getting fearful about that impending doom. So first of all, if you have any SIPs in place, keep them going on. Don't stop your SIPs. The best thing about SIP is that you don't have to time the market and you then get the benefit of averaging. So no matter what, don't stop the SIPs that you have currently in place. Take benefit of the current undervaluations that are currently available in the market, and SIP is the best way to get access to that. Second, once this let this volatility settle down a bit, and if you have any lump sum investments to make, if you're sitting on some cash and you're looking for some investments, use a phase-wise and a staggered approach for making these investments. So the classic example and the most recent example that we can see is the 2008 subprime mortgage lending economic crisis. So people who stayed invested in the market made massive returns in the coming 3 years after the 2008 crisis. So friends, I'll say as human beings, two of our superpowers are resilience. No matter how difficult a situation is, we humans always have overcome it. It doesn't matter whether it's a natural disaster. It doesn't matter whether it's influenza or this coronavirus-like scenario. It doesn't matter whether it's an economic recession. We have always found a way out to come out of such difficult situations. And second is hope. There's always that change in sentiments that happens. Once there's something negative, there is definitely comes a phase when something positive happens, and that's the change in that sentiments. That's when you get to see the benefits of the investments that you have made. So friend, a sincere advice, stay put on your existing investments, and you can thank us later for that. One last piece of advice, again, I would like to reiterate: keep your eyes open to figure out good quality stocks that are fundamentally strong, stocks that have good business models. You can directly use our model portfolio offering to figure out such stocks. What we have done is we have done a combination of top-down and a sincere bottom-up approach, wherein having a good business model and having a a good management along with good fundamentals. These are the main factors that we have looked at while building these portfolios. So do take a look at the model portfolios. And last but not the least, let's take this pledge as individuals to contain this spread by avoiding social gatherings and by maintaining good hygiene. Please feel free to let us know if you have any query or any comment. Stay healthy, stay safe. Jai Hind.